name is Dorota Wysokińska Kuzdra. I'm the Senior Partner and Head of Corporate Finance and Living Services for CEE at Colliers. It was a very interesting presentation of Mr. Matraszek showing some geopolitics. Some geopolitical, challenges and movements. So let me also start the presentation with some kind of global outlook. We, as Colliers, we did a global survey end of last year, where we wanted really to ask investors for their sentiment, the investment strategies, and what are the main concerns and issues they are dealing with. Out of the investors we asked for, majority of them were investment fund manager, but we also asked public listed companies, private equity companies, or institutions. Most of the investors deploy their capital in form of direct investment. This is the vast majority, but also they invest indirectly or in form of platform and partnerships, as well as M&A transactions. The investment activities is pretty equally divided into the three main regions, with 1/3 towards Americas, India, and APAC regions, respectively. The global investment volumes for this year stands for 1.5 trillion of euro, and this is pretty much in line with the annual average of the last 5 years. So in terms of global numbers, we see pretty stable in investors' demand for real estate. However, we see a certain shift between the asset classes. So you will see the increase in industrial and logistic and residential. So the investment volume was slightly higher, and they are slightly lower in retail and offices. I think this sounds pretty familiar to this part of the region as well. Out of the 20 most interesting destinations for the investment, half of them are located in Europe. Majority of them is London and Greater UK, main German cities plus Greater Germany, plus Nordic cities of Copenhagen, of Stockholm. The remaining 10 cities are equally divided between mainly United States of America and going to the east, main mega cities of Singapore, Sydney, Melbourne, and Tokyo. On the next slide, you will see the investment volumes, because I just would like to put this into perspective. You remember this 1.5 trillion of euro of the global investment volume. Again, absolute majority, around 1.2 is or 1.1 is counts for United States and China, which leaves only, if you like, 300 billion euro of investment into EMEA region. What are the main challenges of the investors and the main positive sides? On the next slide, we can see it. On the positive side, most of the investors see the economic and rental growth as a positive sign. Also positive is the rising inflation, which is maybe slightly surprising, maybe not. I leave it for the later discussions. And on the challenges, we have the rising construction costs and all the constraints connected with COVID-19, starting with returning to the workplace and all the travel restrictions, which make the whole investment process pretty difficult. Let's see how it looks like on the EMEA region. Again, let's start with the investment volume. Again, pretty stable in terms of the global numbers. The 300 billion on a rolling basis this year is pretty in line with the annual average of the last 5 years. But again, similar shift to what we have seen on the global level. So an absolute increase in industrial logistic, pretty stable residential investment though. However, a slight decrease in both retail and offices. Again, in terms of numbers, out of the 300 billion investment volume, majority goes to UK, Germany, and France and Nordic countries. You see the gray stands for last year numbers. We forecast that this year will outperform the last year in terms of investment and volume. And the blue number stands for the first 3 quarters. So after we have the final year results, this should outperform. So we end slightly lower level, but as said before, the general trend is pretty stable. The key findings on the EMEA level are also pretty positive. 81% of investors are positive about the economic growth. Nearly 70% are pretty positive about liquidity and rental growth. 74% already implemented instruments to measure environmental performance of the assets, which is absolutely in line with the global priority of ESG. And London remains as the #1 investment location for 2022. In terms of the asset classes, again, I think this is not pretty surprising, and I hope this sounds again familiar to our part of the region, where we have the 3 priorities in absolutely #1 industrial logistics, the darling asset class of last year, offices and multi-family residential. How does it look on the CEE level then? We do not have the final numbers, but we expect that the investment volume in CEE region will end up at the level of 11 billion euro. This will outperform the last year, which was the pandemic year, pretty hardly hit in terms of investment volume and investment strategies of many investors. But we still have room to improvement to the best year in the history, which was 2018 and 19, where the investment volumes across CEE were close to 14 or above 14 billion of euro. 50% of the investment volume is counted for Poland, but also, and the remaining is spread between other and remaining CEE countries, starting with the biggest part of Czech Republic, Hungary, Romania, Slovakia, and Bulgaria. You will see on those graphs pretty equal distribution in terms of investment into different asset classes, mainly office, retail, and industrial. However, similar to what you have seen on both global and EMEA level, we have now an absolute shift from decreasing retail and increasing logistics. Logistics was or is responsible for more than 50% of the transaction volume during the last year, and we see the increasing number of living sector investments, which is something new for CEE, but as you have seen before, it's not new on the EMEA region, and residential or living asset classes were always an investment product for the investors. Where the monies come from, which invest into our region. So no surprise to Poland, 98% is the international money. Here again, nothing changed. Maybe with the REIT legislation, if one day it's introduced, we can change the percentage and increase the domestic money. However, we have a pretty good balance in Czechia and Hungary, where the domestic money is responsible for close to 50% of the transactions. On the global CEE level, the domestic or CEE money stands for 1/4, which is pretty good results, and the 3/4 are pretty equally spread between the usual suspects and usual investors of coming from Europe, America, or Asia. We see the increasing interest from Middle East area. And I think generally it is to underline that domestic investors from Czechia and Hungary were the most active, or one of the most active investors in Poland and generally in CEE region last year. A few words about the yields, because logistics is since a few years already the darling asset classes. So the yield spread between especially in Warsaw and in Prague, between core yields for industrial and logistics in Warsaw and Prague and Germany, which is a representative country for Western and for us to compare with. The spread is pretty narrow now, but nevertheless, the demand from tenants is so huge that we do not see that the investment activity, industrial logistics, will somehow stop. Maybe the yield compression will not be that rapid as we observed, especially last year, but this will not somehow limit the investment activity, and we maybe should expect some kind of rental growth. Basically, the rental growth should be expected also in other asset classes like offices. If you look at the office market, the yield spread is pretty healthy between the core yields in Warsaw and Czechia, between 4 and 5 to below 3% in Western Europe. And if you look especially in Romania or Hungary with the office yields between 6 and 7%, gives you not only a very good gap to Western yields, but also those countries provide with a very good cash-on-cash returns and dividend yields. But I'm sure we will elaborate about this in a second. We sum up some key points for the discussions. We have some kind of common challenges, which I hope it sounds familiar to what you heard from the beginning on the global and EMEA view. ESG is becoming the number one priority also for our domestic investment. We face, and one of the main challenges are rising construction costs, also rising labor costs, plus energy costs, of course. We have inflation, which on the global level is perceived as a positive. Question will be how you guys see it. And of course, we have questions related to specific asset classes. Is office eventually back as an asset class? Will industrial logistics continue to develop? How about retail? Can we expect a strong bounce back in 2022, or this is still too early? Or how about the residential asset classes or the living services? How quick it will develop, taking into account that we start actually from scratch and we compete here with both residential for sale and especially the residential sectors facing the challenges of rising construction and labor costs. So I would like to close here and Richard, over to you, and let's start the discussion.